What's going on, YouTube family? Today we're going to be talking about how dealerships and auto lenders are going out of business. Now, today we're going to be talking about Tricolor. Now, Tricolor is not only a dealer, it is also a lender. Their business model is very similar to CarMax, Carvana, as well as DriveTime. Now, I never thought in a million years that they would fail because they had a very unique operation that catered to one demographic that usually never fails. But unfortunately, because of a little bit of bad luck and possibly some fraud, they winded up filing for bankruptcy as of yesterday. So they've had dealerships in several states and lent millions of dollars across. I believe they have over $900 million in auto loans floating out there right now. But we're going to talk about why they actually went bankrupt, some of the things behind it, and to let you guys know that the auto loan crisis is just ramping up. So if you're new to my channel, I've been talking about the auto loan crisis for literally 3 years, how the crazy lending during the pandemic would eventually catch up and put a lot of dealerships and banks out of business. And unfortunately, this is just another domino to topple. Every single month, there's either small dealerships that do buy here, pay here, or small subprime banks that are either going bankrupt or getting bought out by other lenders, or they just totally stop lending at all. And this has been the market for the last 2.5 years. Now, I was really shocked to see this particular bank and dealership go out of business because they had the perfect business model. I'm not even going to lie. I was actually going to cater my dealerships doing the exact same thing that what they did. But unfortunately, a little bad luck and possibly some fraud finally caught up to them. So I'm going to explain how subprime banks work and how Tricolor tried to hedge their bet when it came to risk. Now, every subprime bank has to deal with risk. And one of the things they do to offset this risk is to charge more money up front, higher down payments, higher interest rates, shorter payment term, and they only lend on specific cars. Now, typically subprime customers have maybe a bad payment history, maybe a repo, or they're first-time buyers. Now, unfortunately, first-time buyers get punished because you get a higher rate compared to somebody that earned their credit. Now, subprime lenders are used to losing money. They basically structure it in their loans. They charge a higher interest rate, and they basically plan on having anywhere from an 8 to 14% default rate. This is just kind of the normal thing. Now, one of the things that offset this risk are a certain group of people that they do loans for, and those people are actually immigrants. Banks love lending money to immigrants. I know this sounds funny, but this is just the way it works, especially when it comes to the Latino community. Banks would rather give somebody that just moved to this country a loan compared to somebody that's been here for a while that has bad credit. Now, why is that? Well, one of the main reasons is if you're an immigrant, you're 5 times more likely to make your payments on time, have a longer payment history, but on top of that, you are less likely to refinance it because you're not financially educated. So what does this mean? It means the bank has a better opportunity of making money on their money, has a longer threshold, so it means even more money in the bank, and if you never refinance it, that means they're going to make the full term all the way through. So at the end of the day, banks would much rather lend to an immigrant or Latinos compared to just a traditional person that's American that has bad credit. This sounds crazy, but if you're a banker or a dealership, please comment in the comment section below so people know exactly what I'm talking about. Now, every bank has been trying to chase Latino or immigrant paper. This is something that's really big. So one of the things that I did was I would travel around to dealerships, buy here, pay here stores, and rate their auto loan portfolio. And banks would pay me to find dealerships that had a large majority of Latino or Hispanic auto loan paper. And this is exactly what they wanted. Sometimes they would pay anywhere from 80 to 90 cents on the dollar, where traditional subprime paper, they would want to do maybe 50 to 70 cents on the dollar. So as you can see, that's a massive disparity from what type of paper they're getting compared to what they're actually paying for. Now, why did so many people want this paper? Once again, it's because they were more likely to pay, and if they had any type of issues, believe it or not, most immigrants would give the cars back instead of having any type of issues. So banks literally pushed people like me to go out and find these people. Now, Tricolor, I believe, was really set on lending only to this specific demographic. So they decided to make 75% of their auto loan portfolio immigrant paper or Latino paper. They set up majority in the West and Southwest states and started lending as much as they possibly could to get the customers they can. Now, this was a great business model. A lot of people were jealous. We saw them rapidly grow for the last few years. But unfortunately, because of maybe some bad timing, a little bit of fraud, and bad luck, everything turned around. Now, I won't talk too much about the fraud because I don't know exactly what's going on yet, but what they were doing is they were using their auto loan portfolio, which I believe is around $270 million. They were using that as collateral to borrow more money from JP Morgan, Chase, Wells Fargo, Bank of America, and I believe they had over $300 million from each one as a line of credit that they use this particular auto loan portfolio as collateral. Now, typically when lenders do this, they're borrowing all this money so they can lend out more. This is just a normal thing that banks, hedge funds, or even buy here, pay later dealers like myself do to lend out to more people. But unfortunately, what happened in the last few years is put a total squeeze on their business market. Not only is the auto loan crisis bad because they overlent on a lot of vehicles that are simply not worth it anymore, but the economy slowed down, people are losing their jobs. But remember, 75% of the auto loans that Tricolor was doing was basically to immigrants or people of Hispanic or Latino descent. So what does that mean? Well, unfortunately, with the current policy, there are a lot of ICE raids and people are getting deported or leaving completely. Now, how does this affect your auto loan portfolio? Well, first off, nobody is getting new auto loans. If you drive around any dealership, especially if they do buy here, pay here, they will tell you that the Latino community has pretty much disappeared overnight. No one's going to go out and buy a car if they're worried about getting deported. So right from the get-go, you don't have new paper coming in to offset some of the bad paper that's going down. Now that people are not buying cars, what's the next problem? Well, the next problem are people that are basically giving back their cars. They don't want to mess with them. So let's say, the guy's, scared, doesn't want to have any bills, just wants to drive a cheap cash car. They're giving these cars back. And remember, these guys don't make any money unless you make payments. So if they gave back, let's say, a $30,000 truck and they take it to the auction today, this guy bought it in 2022, and today this car is worth maybe $15,000, they get hit with a negative $15,000 deficit on their loan. So then they lose money that way. What is if the customer gets deported? Well, now they lose that other income source and they have to go find the car. Unfortunately, when these people get deported, the bank doesn't know. And so they're sitting around trying to get a hold of the customer to find out what's going on. Meanwhile, the car is either in ICE lockup or taken or just sitting somewhere waiting for them to find it. So now the bank has to spend even more money to try to find these cars now that their customers are not there. And also on top of that, there are a lot of people that once somebody gets deported, these friends will talk amongst each other and they will actually steal the cars and take them, strip them, or do whatever else. This is kind of a common thing. So unfortunately, they wind up losing a bunch of cars. Now, the last one we're going to talk about on why they're losing so much money and why this company went bankrupt, but also there's quite a few that are having issues with it, especially buy here, pay here dealers, are people are taking their cars over the border. Now, this is a really bad problem right now because typically, most Latino buyers or immigrants will keep their cars, and then if they have any issues, especially legal, they'll just give them back to the bank. They don't want the headaches, and they'll just get another one down the road. But we've seen a large amount of people, not only with Tricolor, but a lot of my subprime lenders that I've been talking to, of people actually self-deporting themselves and driving their cars across the border again. Now, what does this mean? Well, just imagine, let's say you're a small dealer like myself that has, 50 cars on your book. And let's say 15 of those are Latino customers. Let's say 5 got deported, 5 are still working, but then let's say another 5 or 6 actually took their cars and went over the border. I just lost, altogether maybe $200,000-$300,000 of income and assets, just like that in the last 3 months. So every car that goes across the border, it's, you could figure it could be anywhere from $10,000 all the way up to $50,000. I remember one of my friends that does subprime lending in Texas. He's a small dealer in El Paso, works a lot with a lot of the military there, but does have a lot of Latinos that work there. And unfortunately, he did a lot of truck loans for guys that were coming across the border, doing work there, fixing up cars and fixing up buildings. And so he wanted to make sure he took care of them. So he did, $20,000, $30,000, $40,000 truck loans on these vehicles. Now he's had 20 cars since I think they started doing the ICE raids basically disappear. Half of them, unfortunately got raided or they're being held up at the border. And the other half, people just took off across the border and never came back and never made a payment. So he's out over $500,000 in auto loans, which is absolutely crazy. Now, with a small dealer like myself, that causes us to basically just go out of business right from the get-go. But it took several months for companies like Tricolor to basically feel the effect. Because remember, they don't got any new loans because their whole business model is lending to the Latino or Hispanic community. And if they're not buying cars, that's strike one. Now they're having their cars basically given back to them. People are walking away from their vehicles. That's strike two. And the nail in the coffin is all the people basically taking their cars and taking off with them and not bringing them back. And that was enough to basically break the straw that broke the camel's back. And that's what caused Tricolor to basically fold. They couldn't keep up with their interest payments. They couldn't pay back all their lenders. And one by one, all the dominoes started falling. And now there's 3 major lenders that are owed millions of dollars. I think they filed for protection between $1 billion and $10 billion, just to let you know how much debt they had. Now, their assets, I believe, are somewhere around $350 million in auto loan portfolios. I don't know about real estate, but I remember there's a small dealership here in Las Vegas. It's Tricolor. I shouldn't say small. It's a large one. It's been here for the last 2 years, and I'm not joking. There's been like maybe 10 cars at the most on the lot. I don't know how they pay for rent. I don't know how they operated, but the last few years they couldn't get trucks because that's what Latinos wanted because they were so overpriced, and they couldn't lend because people didn't have the big down payments. So they've been shrinking for the last few years. Now, unfortunately, this trend you see is only getting started. And I kept saying, like I did in the last video, it's only going to get worse because even though the economy is picking up and things are looking good, and we see a lot of banks starting to lend because we're finally starting to get our heads out of the ditch from what the lending did in the pandemic. But unfortunately, a lot of this stuff takes years to develop, and it has years of backdating to follow up on. This whole thing has been building up, and it's taking over years to come out. Because remember, if an average auto loan is 5 years and there's a bunch of bad loans were issued from 2021 to 2023, just imagine how many years it's going to be before a lot of these fall. Right now, we're only maybe 1 to 2 years through a 5-year auto loan cycle. So that just lets you know for the next few years, we're going to still see this stuff starting to pile up. And remember, every time something bad that affects a bank, they offset the risk by raising the rates and changing the requirements for you to get a car. So every time a company like this goes bankrupt, or a customer gets their car repoed, or somebody takes a car across the border, it's going to cost you more money because the bank is going to charge everybody all the way across. That's why you're starting to see a lot of lenders, even if you have good credit, are anywhere from 8 to 6%. It's getting really hard to get a good quality auto loan. Now, I know there's a lot of credit unions out there offering 1 or 2%. There's always a catch, especially when it comes to captured financing. So if you go into a dealership and they're offering you 1%, 2%, 3%, more than likely it's because they're charging you full price on the car, but giving you a break on interest. I'd rather get a discount on the actual overall price of the car, pay the higher rate, and then hopefully in a few months, just recycle, or next year when the rates change. So don't buy into that. There's a reason why rates are so high right now. And I don't care, even if the Fed lowers rate, remember, only 10% of the money that's being lent out there in the world is basically bank or government money. The rest of it is private individual, hedge fund, or other people's private money. So even if the rates do go down, don't be surprised if you see maybe a small movement when it comes to not only auto loans, but as well as mortgages. So anyways, I thank you guys so much for watching. If you guys have any questions, please in the comment section below. Make sure you follow me on Instagram at Lucky Lopez. Please like and subscribe. We're on the road to 1 million subscribers. I think we're at 535,000. So we're halfway there. So wish us luck, and we'll see you next video.